Hey everyone, welcome back to the channel. Trading
Hey.
Futures Live, where we trade futures live. Quick comment, we're here just for educational purposes. Please do not take our trades. Trading is inherently risky and loss of money is almost certain at some point. Not every trade is a winner, so we are here to trade live in front of you guys. Sorry we're a little late today. A couple of technical difficulties getting our streaming service set up, but we are ready to go. My name is George. This is Franco, and he will take over.
Hey, good morning, guys. Pleasure to be here, trading in front of you.
Order filled.
And the market just opened like 7 minutes ago, and I have everything set up for my trading today. A couple points that I need to highlight. We do have news reports, economic news reports today, and we had the Red Book at 8:55, and we do have a very important report coming up in 23 minutes, the JOLTS job opening. We do not care about the results of the reports, basically. What we care about is the volatility that they cause to the market at the time that they, are released. For those who don't know what the Red Book is a retail measure. Is an index created by a company called Red Book out of New York, and they collect data from retailers to measure their sales, right? And then the most important number today it'll be the JOLTS job opening, and that's a very, very important measure that we get for employment. And what the JOLTS opening gives us basically is the temperature on the labor market. It's performed by the Bureau of Labor Statistics, and it's released once a month for data of the previous month, but in this case it's released in May, but we'll get data for March. And this is a very sensitive report that we're gonna get, because we're waiting for the Fed to see what the Fed's actions are gonna be, and the labor market is one of their mandates. So now in this time of uncertainty with inflation and so on, we need to be aware of what the labor market is doing, because if we do have a very bullish number, if you will, there's a lot of jobs unfulfilled, meaning there's a lot of spaces to be filled. That will give the Fed the idea of how the market is performing, meaning if there are a lot of jobs there, they can feel like, okay, we can tighten more aggressively and kill inflation more aggressively, because the economy is actually running very hot. Like there's a lot of open jobs, there's a lot of opportunities, so they feel like they could tighten more aggressive. So we'll see what the number is. Like I said a few minutes ago, we don't care about the number for the trading, but ultimately we care about the number, to see what's the overall economy, temperature regarding employment. As of right now, I wasn't very bearish but now I'm turning my bias to the bearish side. We just broke the overnight low and we're bouncing from there. I do have a demand zone at 12,982, and I don't have a really good supply. Not here. So I'm gonna be here looking for opportunities and try to do my best to teach you guys what I do. I can see how the 5 minutes is just hovering on the overnight low, and it's like 1 more minute for this candle to close. We have yesterday's close. Yesterday's close was around 13,070, so we're down like 1/3% for the day. It's not a big deal. There's a 5-minute formation here at 12,998. That was touched, but this is not the best type of formation. The location is not optimal. Now we have the ADQD trying to make new lows. Right, it's yet to see what it's going to do. The tick chart does not look very bullish though. It's making lows and then it didn't make a new high on this spike, while the market was making a new high here in this candle of 3 minutes. So I'm going to put here the 1 minute so you guys can see more clearly. I won't be taking this zone limit order for the fact that the ADQD is just pointing for more bearishness in the market. Look how important is the overnight low and overnight high. Is so important. Every day price just hover around there for a period of time. If we break it, then yes, we continue. But after having such a day yesterday, I don't know what type of day we could have today. If because after a very volatile day, we do expect some sort of like consolidation, right? That doesn't mean it always, behave the same. As a matter of fact, never the market behaves the same. It's very unpredictable. That's why we have to do our best to understand how this is a very probabilistic type of business, and with that approach we could be less nervous about our trading and embrace uncertainty, because markets are very uncertain. They can come up 2% and then the next day it goes down 2%. Especially now in this environment of high volatility. By the way, about high volatility, I want to tell you guys that the VIX is right now above 30. It's sitting in a very crowded place, meaning that there's a lot of supply right there. It's not going to be easy for it to go to 40. But nevertheless, 32 in the VIX is a pretty high volatility compared to historical basis. For instance, all 2021 hovered around 20, with some spikes to 27, 25, but the majority of the time was around 20. Now, since October, right, we've been having all this volatility. Came down when we had the spike of 10% in March, but it didn't spend much time on the 20s. Right now we're back above 30. That tells me that stocks are very volatile. This index comes out of how many people are selling puts, selling and buying puts. And selling or buying puts means they want to protect their portfolio. If they want to protect their portfolio, they think that their positions can come down, right? So, it's a very important measure that we follow every day. So in this trade, we barely had 1-to-1 probably. Yes, so I decided not to take it. I decided not to take it limit order for the fact that the AD is not aligned with my intention right now, which is going long, right? But right now it's still working, so 146, 146, all right. Oh, look at this. When was this? 43. 43. We might have missed this opportunity, but if we come here and the tick chart is making new highs, I might take this confirmation. The way I do it is 62.82, so it's like more than my established risk. So my established risk for today, and this is a very, very important point that we need to talk about, not right now, but later. I will come back to this in future videos. Is all right, what is your bank account, I mean your trading account balance, right? And calculate the percentage that you can risk per trade, because there's something called risk or ruin. We don't want to be there, right? We want to conserve our capital. That's one of the first things that you need to learn as a trader. that your risk of ruin is something very sensitive. So as of right now, for this account, the funded account, I can risk up to $327 per trade. So if I put this
Order
trade,
submitted.
I'll be risking $275. Not bad.
Order canceled.
Yeah, and you guys cannot see my trade here. So let me put it on chart trader. Yes. There you go. So price is approaching to our zone, right? ADQD is not bad. Came back, went up, but as of right now, it's not creating new highs. It's just hovering right there. What I want to see is this. What I really want to see is the tick chart giving me an extreme. When the tick chart gives you extremes, it creates what we call the exhaustion pattern, meaning price is already exhausted and needs to reverse to the mean. And that is our tradable reaction trade, the reverse to the mean. Since this trade is already, this zone is already tested, meaning it came back after the validation of the zone. It came back once. I didn't take it because I missed it. The only way I'm gonna take it is if it gives me a confirmation pattern. The confirmation pattern is something that I don't do very commonly. And it needs to be a quote-unquote perfect setup. There's no such a thing as a perfect setup, but I'm going to be very strict about how to take this trade, if I ever take it. So the way it works is, alright, I need a high, extreme high on the tick chart, meaning price is really exhausted and it needs to come down. As of right now, it's almost breaking, yeah, and it's right now it's creating that extraction. Now I want to see the 7-minute. Is the 7-minute giving me a coherent pattern for me to take this trade? Not so much, and I would say this. When a candle starts in a certain pattern and then flips to, let's say it was bearish, right? But now it flipped to the bullish side and is about to close, let's say 15 to 20% of the time of the candle. If it was a 5-minute candle, we will be talking about the last minute, right? If it turned around and is the last minute about to start, or the 20% left in the candle about to start, I don't want to fight that candle. I believe that the candle can keep going in that direction. So that is one way that you can time your trading and say, all right, how good is my zone? Do I have momentum on my side, right? Or I just want to take trades blindly. Right now the market is not doing anything. Now it's very important to say that our demand zone worked perfectly, right? All right, had it. It's 2 more minutes for this 7-minute candle to close. And I did have some retracement on some extremes on the tick chart, and I'm gonna submit the order right now and see if this gets filled before it breaks the zone. Oh, very important. We do have JOLTS opening in 2 minutes. I'm gonna calculate this. Alright, we're in this trade. And I'm gonna calculate the 1-to-1. And the 1-to-1 will help me to assess if I need to move my stop break even or not. We might get stopped out of this trade. The pattern on the 7-minute does not look good, but we're in it, and we need to work with our probabilities. And our 1-to-1 is 13.049. And then is the news out? Yeah, no, not yet.
Not yet.
Yeah.
1 minute.
Yeah, it's not good.
Stop.
Yeah, we're stopped out of this trade. It is what it is, guys. We did what we're supposed to do. We never went to our 1-to-1.
Alright guys, news is out. Still waiting for it to post on the forexfactory.com website. The factory orders month over month are green. They came in better than expected. The JOLTS job opening is still hasn't been posted. We'll give it another minute or so.
What is it right now? Oh, there we go. It's a very great number. George, are you able to show your screen or no?
Not at the moment, no. I have not set that up yet.
Look, trading is very hard in this sense. Like I had this zone. I decided not to take it, limit. I mean, then here, when here in this let's say in this comeback, right? So I decided not to take it here, right? Did not take it, right? In this one. And then here, what I could have, this is very important, coulda, shoulda, and woulda. I did not take it because I did not have the signal, right? And this thing worked. I would dare to say at least 6 to 1. Yeah, this is 5 to 1 right now. And I took a short here, which did not work. Now we're -1, right? But this is the beauty of trading. I mean, we have to keep learning and keep improving, right? Here is when it gets really hard psychologically, because you had this opportunity, you didn't take it, and I had this opportunity, it didn't work. So it's like brewing your psychology that, damn, why did I do this, right? Well, the important factor here is, all right, how are you going to handle this? How are you going to handle what you did? How are you going to handle screwing it up? Or not really screwing it up, but it's just a matter of probability. So you thought that this opportunity was not good and the short was good, right? Now, the important part here is, all right, what am I gonna do right now? How I'm gonna face this when I missed an opportunity, then I took a loss. And the best way to approach it is, all right, and this is so important and key for traders. Like, every trade must be, and it's not, but must be an independent factor. So you have to make decisions based on the market, not on what you did. And I'm guilty of committing those actions. Like, okay, I took a loss, now I want a revenge, and then I want to make the money back right now, right? And that's part of the immediate gratification that we have in society. We want to get it done now. We want the Instacart. We want the social media spike in your brain, the dopamine spike. So right now, the best approach is, all right, let me calm down. Let me do a thorough analysis, right? Okay, what's the market really doing? All right, is it going up? Is it going down? Is it sideways? Right? Multiple time frame approaches. What's the 30-minute doing? Did we break the overnight high? If we break the overnight low, remember guys, yesterday we broke the overnight low and we went deep, right? Lower. And then we went up in the afternoon. So the market, the beauty of this is that it doesn't do the same 2 days in a row. It's very, very rare when that happens, right? So as of right now, I'm inclining more to the long side, obviously. Even though the market is flat, I'm leaning more to the long side of the market today. But I really don't have any clear signals right now. I don't have any demand zone that was formed. I had this previous demand zone that could work again, but I don't think we should take it. What we should do is just wait for another opportunity to unfold. If I were to short from here, would be a awesome location, right? And location is one of the factors that I looked into, like that I have to look into before I trade, because location can give you more margin of error. Like if the market is exhausted of going up, right? Buyers are tired of buying so expensive, right? And there's an opportunity for retracement because the market is going down. It went down the last month and it's been going down since mid-October or November. Does not mean that the market will go down forever. Whereas I can say the market will go up forever. So there's an edge that we have there. Trading the markets long is always more probable than trading the market shorts. And that comes with the caveat that what is the market doing this season? Is the market in the bear market or is the market in a bull market? Do you have any comment, George?
Not currently, no. Market still hasn't gone anywhere.
Yeah.
The ES is stuck in its opening range, basically. It made an attempt to the upside, but nothing has
It didn't break the overnight high.
not didn't even really test the overnight high.
No.
Hasn't really tested the overnight low. Again, we somewhat expected this Monday and Tuesday, even tomorrow morning, leading up to the federal funds rate announcement. And then again, like we stated yesterday, we have non-farm payroll on Friday. So the news this week is later on in the week. So we're expecting the bigger movements later on in the week.
Yeah. Now we will have a lot of volatility tomorrow afternoon, for sure. We're expecting a 50 basis point rate hike, and I think the market already baked in that news. And I can't comment on that. CME Fed rate probability, right? So I can show this. I can show you guys how the market, what's the market pricing, what is the market pricing in, right? So this is the rate hike probability for May 4th, which is tomorrow, right? And right now, as of right now, we're at 0.50, right? But the higher probability is that they go to 75 to 100 basis points. which is 50 basis point rate hike for tomorrow. This kind of overwhelming probability against the other option rarely, or I would dare to say never, make mistakes, right? We could have a surprise, but I doubt it, because the Fed does not want to rock pull the market in either way. And if we will have a 25 basis point rate hike tomorrow, this market will go to the moon. And I don't think the Fed is very interested in that. They want to bring valuations down to earth, right? And on the contrary, if they raise the rates to, let's say, 100 basis point instead of 50 basis point, it'll be the rock pull to the other side, right? The market would crash. So they don't want that either. And for you to take a look at this, this is the May 4th meeting, right? Look at the June 15th meeting. Is considering another 50 basis point hike. Now it's at 86%. This will change over time. Now for the meeting of July, then we have this. Look, even they have a 75 basis point hike. So this will change over time. But as of right now, tomorrow we will have a 50 basis point hike. And that's already baked in the market. That's why we had such a drop last month. Now, my interpretation of the JOLTS job opening report is, all right, the report came very bullish, meaning they were expecting 11 million jobs available for Americans, right? And the number came 549,000 jobs above the goal. That is a very, very bullish number. For me, is all right. The labor market is very hot. Like, employees are able to change jobs and tell the employees to the employers, look, either you pay me more or I'm gonna leave, right? And there's a very tight labor market right now. So that gives the Fed the opportunity to raise rates in a faster pace and have more room with the labor market. They don't want to damage the labor market. They want the employment market to be sound, right? That's one of their mandates. But what happens now is that they don't care about the labor market right now because this is very hot. So they have room. So this number being so bullish on the labor market means that the stock market can suffer because the Fed will have more room to rate hikes.
Hike rates.
Hike rates. If I mute this, it's not mute. It's muted right now. It's not muted. You sure we're using this one? Look.
Which is weird because it was working.
Look, if I.
The other mic is literally muted. It's
Okay.
definitely like the one that's on.
That
It should mute though, like you said.
Okay, it's muted, right?
Yeah,
No,
but it's not. And I had already tested that before and it was working.
It was working?
Yeah, it was doing that.
Alright. Alright guys, we continue here. Here's the thing. You see how I missed this opportunity? I had this area here where I could have traded and it came back, but I didn't see it. Either I was distracted talking to you guys or I'm nervous of this transmission, like people watching my trades.
It happens.
It does. Look, trading is so personal that anything can affect your trading, right? And I'm not talking about results. I'm talking about performance. I'm talking about missed trades. I'm talking about not seeing opportunities. I'm talking about making the wrong decisions, right? Process. Not about results. Results, I mean, your P&L will be the reflection of your process. It'll be the reflection of how do you do things. I'm a firm believer of that. So right now the question is, do I take this trade again? So this was 1451, right? 1451, and here 1451. It was an extreme. So the way this works is, alright, if I want to take these again, I could go with this one. I think this one will give me a better chance.
Order submitted.
$360, so I need to short this for $300. I don't know why it's not showing that here. Remember guys, this is a per contract, per trade, right? This is based on the challenge that we have right now, which is a $150,000 funded account. And we want to show you guys how you can grow that account. Remember, that $150,000 funded account is not really a $150,000 funded account. It has a room of $5,000, right?
A drawdown.
Yes.
That zone was working out.
Yeah. And obviously, like I said, the number on the JOLTS opening is not bullish for the stock market. It's bullish for the labor market. And being bullish on the labor market means that the Fed has more room to hike rates, right? To raise rates. Market does not like higher rates. Another comment that I can make about rates is right now the 10-year yield is 2.932. We went to 3%. That's a very sensitive number for the market. Because people can and will start turning into a 10-year government bond, which is a quote-unquote risk-free asset. It's not risk-free, but it's risk-free of default. The U.S. government will not pay this interest, but obviously you have the risk of inflation, right? Which is right now around like what, 7%, 8%. But the market does not expect the 7 or 8% to last for very long time. Why do I say that? Because I have this 5-year break-even tip bond, which is a quote-unquote inflation protected bond, and the 5-year right now is 3.21%. And I want to tell you guys what was on its high, which was March 25th, was 3.58. So it's actually coming down. So that tells me the market does not expect inflation to run very hot for a very long time. And this is a five-year measure, right? That tells me also that the market trusts the Fed in a way.
For me personally, I'd like to see it break out of the range today. It's quite the small range so far. We're only about 200 points in the ATR. The daily ATR recently is up around 450, so there's certainly room for this to run in either direction.
We might have this short too.
I know that.
I never thought that the keyboard annoyed you so much.
No, it doesn't. But you don't hear it.
I do.
Now you do.
I do, but no, it's awful in the video though.
Franco has the loudest keyboard ever made.
I mean, I love it. I even have two. I have one in my office, one in my home office. Alright, 1.5 minutes for this 30-minute candle close. And still the market is going nowhere. It's flat. Basically flat. We missed a couple of opportunities. We had one long, then we missed this short. Now, new 30-minute candle right now. Now, this zone that I have did not want to take a limit order for the reasons that I've already explained to you guys. I need to see an extreme, and I did not have an extreme. I did have it, but in the previous candle in this one. And the risk reward ratio for this one will be there you go. It's already more than 2 to 1. It did go to my target, 3.6 to 1. This is a patient sport. You have to be very, very patient. Alright, we have an order right there. Still the zone is working. Makes me more skeptical about the next zone, because the 30-minute will have a super bullish candle. I have the order set up right there, and we're gonna be filled in a few seconds. Is 25 seconds for this 7 minute, and if they don't fill me in here, I think it's gonna be a better. It's 10 seconds. 10 seconds. It's 5. All right. See how it goes. Inside the zone already. My risk management makes me. Ooh. You know what? There you go. It actually touched my order, but didn't fill me in. It actually touched my order and did not fill me in. Can be this possible? And this be possible, George?
Yes, it can. It has to go through your price on the limit order.
Yeah. So right now I'm taking the order off, and I will put it back on if it goes through. This can be very frustrating, guys. You guys, like you guys saw, I had the order there. It touched my order, didn't fill me in, and now it's more than 2-to-1 right now. I guess this is a learning experience, not only with YouTube, but with trading on YouTube.
Yeah.
There's no chance for me to take this trade again because tick chart is below 0. This can be very, very frustrating, guys. That's my target. That's 4.5 hour. You can call it however you want, but this happens on the market. This happens very often. If you don't have the strength psychologically of just accept, because I don't have a better word for you to understand how the market works, that level of uncertainty that you need to embrace, to the point that I had my order there, it touched it, and of course there's competition to sell. And if my order was not sitting there before other ones, other orders, they're gonna feel just the first ones, right? But my order was in line, and there were not enough buyers at that point for me to sell. And that's the way it works, guys. We need to embrace uncertainty to be successful in the markets, right? And after this trade, I think we can leave it like this for today, and we will come back tomorrow with more of future trading live. Thank you, guys.
All right, have a good one.
Marico, qué annoying. Yeah.